I think you can start.
A very good morning, good evening to everyone. My name is Rima Bandekar, and I will be your host for the session. On behalf of the Bahrain chapter of ICI, I would like to welcome you all to today's technical session, Tax and Regulatory Update for Business in Bahrain. This session is brought to you in association with MMJS Consulting. Before we start with the main session, a few ground rules that we would like you all to follow throughout the meeting. First one, everyone other than the speaker is please expected to be on mute. Second, please note down any question or queries that you may have and note it down in the chat box. And we will surely try to take it up in the Q&A session. And third, please do not miss out on the exciting Kahoot quiz coming up at the end, and ensure that the Kahoot app is downloaded on your phones. With the ground rules at the side, I would now like to call upon our chairman, CA Ajay Kumar, to address the session.
So thank you, Rima, for the quick introductions and respected speakers of the day, Mr. Surendra Jasrani, Mr. Ali Al Mahrous, CA Rishabh Tandon, and Mr. Abhi Gupta. And I hope Mr. Jiku is also there. I think he's our main contact with MMJS as well. Dear members of BCICI, friends from overseas chapters and invited guests, good evening to all of you. So welcome to the last technical event of this term. And I don't think any other social organization has been as active as we have been in the last 12 months. So effectively, we have been beating COVID hands down with the number of events and the variety of events that we have been doing. And if my count is right, I think this is the 30th CPE meeting. This is not including all the trainings and other general events that we have been rolling out during the year. So initially, we were targeting about 2 events per month, and that is about 24 for the year. So we have kind of ended up doing about 30. So not too bad, and we have tried to be as varied in content as possible and choose topics which are of interest for the members. And I guess this is evidenced by the fact that we have had an attendance of more than 100 members for all the events during the year, despite it being on the online mode and almost always on the weekends. And today's event is also one such value-added event, as it tackles the regulatory topics which has impacted almost all the businesses in Bahrain during the recent years. VAT, ESR, PDPL, and CBCR as well. As a head of compliance at my company, this is probably a fitting end for my term, I guess. And we are very fortunate to have esteemed speakers from MMJS who are handling this session, led by Mr. Surendra Jasrani, the managing partner and group CEO of MMJS, along with Mr. Ali Al Mahrous, the partner of tax, Mr. Abhi Gupta, Director of Consulting, and CA Rishabh Tandon, Senior Manager of Tax, and also our dear member of Bahrain chapter. Of course, MMJS have also been our gold sponsor during the term, and I thank them for their support to the BCICI, especially Mr. G. Kulu has been to our go-to person for all these events. In terms of chapter activities, the current team will rather vacate the office at the end of this month, and the new team under the dynamic leadership of CA Santosh is already geared to take office from the 1st of August. And although it's still been a very eventful month of July, we've had an extended CA Day celebrations. We successfully conducted our cricket tournament, where the team sponsored by BFC came out the winners in the men's tournament, and the Al Hilal team won the women's tournament. We have also had technical sessions, namely the IFRS quiz done by CA Mahesh Balasubramaniam. We had an amazing session on Blue Ocean Strategy by CATP Anand, which was held in collaboration with the Bahrain India Society. We also had a very successful family day at LPOD. I think this was much appreciated by members, kind of a get together after a long time. So it has also passed off without any incidents. So that was also a great success. We also successfully conducted the CA inter and final examinations at the Indian Embassy, and the foundation exams have started today, and which will conclude on the 30th of July. So it's been quite active month for us, despite being the last month. And although we'll be laying down the office at the end of the month, there'll be a few more things which are planned. We'll be launching a BCICI library at the Bahrain Accountants Association premises shortly. And as requested, members are requested to come forward and donate books. A number of you have already done that, and thank you for all of those members who have already contributed to the books. We are also ready to launch our learning and management system, and we will need support of the members to create some content on this platform. So we have a lot of I would say talent within the fraternity, people with good knowledge about various technical topics. So we will reach out to you people. We probably might do a badminton tournament under the control of CA Vineet here and CA Gaurav. We are planning to do a badminton tournament hopefully on the 29th of July. We will also have a blood donation camp on the 30th of July, and we will close the term with a family session on the 31st, which will be kind of a humorous session, which can be enjoyed by all. And last but not the least, we will also close the term with a very special quiz, a mentors quiz, which will be based on the 12 Mentor of the Month episodes that we had rolled out during the last year, with the latest one, with CA Alo Gupta, which was released yesterday. So I really thank you for all the support and the participation that I've received from all the members. It has been really amazing journey for us. And before we close, I think I just take the opportunity to thank you all for all your support. I also express my thanks to Sia Rima for taking up the MC role today. So she was the winner of the Speechcraft program, which the BCSA conducted in collaboration with the ICAP Toastmasters and C2A Toastmasters. So she is now getting the opportunity to, the platform. This is what we try to do, provide a platform for our members to enhance their communication skills as well. So with that, I say I wish you all a wonderful session, and thank you. And back to you, Sia Rima.
Thank you so much, CA Ajay Kumar, for your gracious words. Let us now move to our technical session on tax and regulatory update for business in Bahrain. With the ever-changing dynamics of today's business space, we all have to constantly update ourselves with this change so that we can stay ahead of the curve. With this, let me welcome the first esteemed speaker for the session, Mr. Surinder Jasrani, who will be giving us an introduction to the tax and regulatory update for businesses in Bahrain. Surinder Jasrani is the Group CEO and Managing Partner at MMJS Consulting, a chartered accountant by qualification and entrepreneur by nature. Prior to joining MMJS, he held key positions at HSBS Private Equity, Infosys, L&T, and GM. He was selected as a corporate icon of the UAE for the third consecutive year by a leading magazine in the region. Let us welcome CA Surinder with a round of applause. Over to you, sir.
Thank you, Ms. Rima. Thank you for the wonderful introduction. And I would like to thank leadership team at BCICI. Thank you for all your support, Mr. Ajay, in the last year. And warm welcome to Mr. Suresh. Looking forward to see you when I'm in Bahrain. I enjoy the sessions and I feel happy and blessed whenever we do any sessions for ICI, be it Dubai, Abu Dhabi, Oman, or Bahrain, because it's a family and it goes back to where we belong to. So thank you again for giving us an opportunity to share our thoughts and our knowledge on the tax and the regulatory environment. As we all know what's happening in last 3 to 4 years in GCC, I think the governance, the compliance and the regulations are driving the businesses. And I personally believe this is just the beginning. This is just the beginning in the region where the law started with the VAT in all the GCC countries, leaving 2 countries still to come in. Our vision was very clear to have one GCC, one MMJS. Having a leadership, senior management, and execution team across MMJS and solving the business challenges on other side. We have been walking this journey from 4 years, and I think I have a very special relationship with Bahrain. Started with zero, and we are blessed with good clients to the business support, and I am thankful to all of you who are there in this session who believe in us, and we will continue our journey to add that value in Bahrain. For today's session, it's very important that what we cover, it's actually giving you a lot of insights. So, I mean, there are a few topics which are very, very important, taking the practical aspects into account. But before I go into that, I would like to welcome Mr. Ali Mehruz. He has joined MMJs as a partner. I'm very excited to have Mr. Ali with us in Bahrain. So this is our commitment to Bahrain. As MMJs, we want to add value to businesses. next 20 years. We are there from 2.5 years, 20, 30 years. So idea is to be with you and will be adding value to each and every aspect on future consulting. So for today's topic, when you see the VAT, the topics which you have covered will give you a lot of insights. What is a VAT journey from here on? And we have been seeing in other countries how the journey has gone in Saudi and UAE. So we know what is going to come. I mean, probably we understand how it is going to work. We have tried to cover the points which will help you to plan your business more appropriately. So the team will cover all the relevant topics which you need to keep in mind for the next few days, weeks, months, or a year, because this is very important. Then very important topic, which is on corporate tax or economic substance related aspects. Economic substance regulation is just the beginning in the region, which is there in UAE and Bahrain. Why it is not in other 4 countries in GCC is because there is one or other way corporate tax in these countries. You will see a very interesting table done by my partner, Mr. Ali, on how it is a very high impact for UAE and Bahrain. Whereas other 4 countries, the impact of this global corporate minimum corporate tax is a topic which is going to change the way businesses are done in GCC, especially in Bahrain and UAE. So very insightful session and very insightful knowledge on that. I would look for Ali to share all the knowledge with all the attendees. Coming to PDPL, I think what is personal data protection law? I personally believe data. I used to believe data is oil and soil, but I see the data as a new wealth. Data is such important aspect. I'm sure you might know few of you might know we have MMJ's data files, a data analytics, data science, a machine learning, a separate entity which takes care of technological aspects of data. In today's session, we'll cover about the laws and the compliance part, and then and what is PDPL is very important for each business to know. So my colleague, Mr. Abhi Gupta, he will take a session on this. Nate, I would say that at the end of the session, the objective is you will be more informed, you'll be more knowledgeable, and you will use this knowledge into your day in, day out businesses. It will help you to see that you are compliant, risk mitigation is taken care of from your side. So with this, I will hand over to the team, and then over to you, Ms. Rima again. And I would say a lot of learnings today, and we'll try to make it more informed.
Thank you so much, Mr. Jashrani, for your kind words. I am pleased to welcome our next guest speaker, Mr. Rishabh Tandon, who will take us through value-added tax, VAT, in Bahrain. Rishabh Tandon is a senior manager at MMJS and is a technical lead for VAT for the Bahrain office. He is a chartered accountant and has over 7 years of indirect tax experience assisting clients in VAT implementation, diagnostic reviews, and compliance in various sectors, including real estate, financial services, hospitality, consumer markets, to name a few. Please welcome Mr. Rishabh Tandon with a round of applause.
Thank you, Ms. Rima. Thank you, CA Ajay, and thank you, Surinder, for the brief introduction. I believe, I'm being, a member of BCICI since the last 2 years. And the last year being the pandemic year, I can personally say that it was the most thrilling one, with around 3 events happening every month. And, it was really engaging from that particular sense. So from a VAT perspective, as you all can see my screen, what I would be covering today is the litigation structure for VAT in Bahrain, approach of NBR, the National Bureau of Revenue, towards the VAT audits, and brief on penalties and prosecutions under the VAT law. For the third point, you guys must be thinking that, penalty and prosecution was discussed at the time of implementation, and why are we touching this topic again, right? It's almost 2.5 years. We are in the VAT regime, and why are we discussing this penalty and prosecution? So I'll definitely inform you that once we reach this topic. So once before I start my discussion on the litigation structure, VAT being around in more than 100 plus countries, Bahrain, being the newest one, as we can see, GCC is the newest countries to implement VAT. And litigation structure is in the established countries, it's at a very established level, wherein we have appellate courts, tribunals, then different level of courts. Let's say in India we have a tribunal, then district court, high court, supreme court. Similarly, now Bahrain, in terms of the litigation structure, are also planning, or they have already set up a structure wherein the taxpayers can appeal or they can object against a decision which is issued by the National Bureau of Revenue. So once I move into the next slide, so as you all can see my screen, the Kingdom of Bahrain has set up a 3-level dispute resolution mechanism. So the first one is the review and appeal section, which is a function within the NBR. So it is an independent function which is within the NBR, but it takes care of all the reviews and appeals which the taxpayer is filing. The second is the Tax Appeals Review Committee. It has been recently set up in this particular year. And then there is a competent court. The Tax Appeals Review Committee is a completely independent function which has the powers to recommend the decision to the ministers and has no powers to make a decision for himself. I think someone has raised his hand. I can continue. Okay. So just to understand the litigation structure, we have prepared a small process flow chart in terms of what is the process in terms of when the NBR issues an adverse assessment, what all the taxable person has to do, what are the time limits the taxable person has in terms of filing an objection with each and every committee. So if on my screen you can see that the tax authority, which is the NBR, taking an example that they have issued an adverse assessment to a taxable person. Now the taxable person, if he does not agree with the order, he has 15 days to file the objection with the review and appeal section. So to all the members, please please concentrate on the timelines, because I have prepared one question as well for you all on the same. So I would expect you to answer that correctly. So taxable person has 15 days to file an objection with the review and appeal section, which is a function within the NBR. Review and appeal section will take 30 days to inform the decision to the taxable person. Now, let's say the review and appeal section again comes up with an adverse order. The taxable person will again have 30 days to file an objection with the Tax Appeals Review Committee, which I said previously, that's an independent committee. I will also touch upon the practical aspects as well as to what is the procedure, which has to be followed. Tax Appeals Review Committee will inform the decision within 30 days to the taxable person. And if again the order is adverse, then the taxable person has the last resort as to go to the court, and the time limit for that is 60 days. To understand the process flow better, I have prepared a small, a brief illustration in terms of, what is the entire process flow starting on the NBR audit. So the NBR, let's say there is a company A who has been, wherein the NBR has initiated a VAT return audit, and the notice for the audit has been received by the company on 1st February 2021. The audit takes around 1 month time. Generally it can go over to 6 months, maybe 1 year as well. But let's say in my example, it takes around 1 month, and the audit gets completed on 28th of February. In the order, NBR concludes that company A has charged 0% VAT for some sales which qualify for 5% VAT. So since the sales were qualifying, let's say the output supplies were qualifying for 5% VAT, and the company has charged 0% VAT, that means it has resulted in an underpayment. Now, I hope that most of the members would have seen that how the NBR issues an assessment notice, and what all factual things are there, what all the NBR asks you. That also we will cover in the second section of my presentation. So the NBR basically are the reason for the assessment facts, what is the legal basis for them to qualify this particular supply as a standard rate rather than a zero rate. The value of tax which was paid by the assessee, the tax difference, the value of net tax which is now due, which has to be paid by the assessee, and the penalties, whatever, wherever it's applicable, and the date of payment, that by this particular date, either they have to file the objection or they have to pay the due amount. Now, the second resort, the company A goes to the review and appeal section. And as I said in my previous slide, that for the taxable person, company A in my case has 15 days to file for an objection with the review and appeal section. So let's say the company A files for an objection on 10th of March, which is within 15 days from 28th of February. The review and appeal section, they reply to the taxable person within 30 days of the request. Moving on to my next slide, which is related to the Tax Appeals Review Committee. Now, company A again receives an unfavorable assessment decision from the review and appeal section on 10th of April, which is, let's say, within 30 days when we had filed. Now, this is the second resort which company A has to go to the Tax Appeals Review Committee. Before going to the Tax Appeals Review Committee, the entire penalty and the tax amount has to be settled with the NBR. Only then I can proceed it with the Tax Appeals Review Committee. I cannot do that. Plus, there is a small administrative fee of 50 dinars which has to be paid. Now, to pay this 50 dinars as well, there is no automatic mechanism which is, as of now, it is there. So we have to write an email to the NBR that we have to file an appeal, and NBR will create a liability on my NBR portal, and only then I can pay this 50 dinars. After, when I file for an objection, the objection or the appeal in my case, the Tax Appeals Review Committee will notify company of a hearing date. So in practical sense, when I saw as MMJs, when we have attended a few hearings, there are 4 to 5 committee members who are there who will listen to your appeal. There is no bar on language. It can be in Bahraini, or it can be in Arabic, or it can be in English as well. They will listen to all the facts and what are the legal grounds on the basis of which we are fighting the appeal. For example, in my case, I'm saying that company A has treated certain supplies on a zero rate basis rather than doing it on 5%. So definitely, I mean, the Tax Appeals Review Committee will consist of certain lawyers and like all independent people. They will listen to your appeal, and basis the hearing, the Tax Appeals Review Committee will issue its recommendation to the minister or the delegate, and the minister will then approve, amend, or cancel the recommendation which has been given by the TARC. Practically, it's around 30 days which the Tax Appeals Review Committee takes, but in one of the cases, I've seen that it has been extended to around 3.5 months as well. However, in one of the case, the decision was informed to us in 4 days. The next level of dispute resolution mechanism is, of course, a competent court after the Tax Appeals Review Committee. If again there is an unfavorable decision and company still thinks that the decision which is given by TARC is also wrong, then the third level of dispute resolution mechanism is the competent court, and the company A in my case will have around 60 days to file for the objection from the date of the notification of the decision. And definitely the court will follow its own course of decision, or own course of action in this particular case. So this was all from my side in terms of the litigation structure. If you have any questions, please put it in the chat box. So I'm moving to the next section, which is the approach of NBR toward VAT audits. As I said that, most of the attendees who are there, they would have experienced NBR VAT audit in the past, or they would be experiencing it now. The NBR keeps on changing the way they audit. It's not a standard set of documents which the NBR will ask each and every business. So in some of the cases, they don't even ask for the basic sales and purchases. In most of the cases, they will go into deep down into the contracts or deep down into supplies. For example, in the real estate sector, which is, in terms of it's really, we have seen that real estate sector, they, go deep down into the contracts to determine, whether it's an exempt supply or a zero rated supply or a standard rated supply. So on my screen, this is just a depiction in terms of what generally the NBR asks for an audit. So sales, registers, purchase register, import calculation files, agreement contracts. So monthly value of sales and purchases for the last 15 months, it can, what we have seen maximum is like 15 months, but it can be for the last 6 months as well, or 12 months as well. Generally, all the tax authorities have a common mindset that, the company would have, miscalculated the input VAT deduction. So that is the most important thing for all the companies to check, whether input tax has been recovered correctly or not. So the major areas where, input tax credit is disputed is where there is an element of personal and business use. For example, medical insurances, their vehicles, mobile phones, accommodation as well. So all these places, there is a chance that, the NBR goes into detail, and they have in the past as well, in the future, they are going into that. So in terms of the motor vehicle, in terms of mobile phones, imports as well, medical insurance, these are the details which the NBR asks specifically. So for motor vehicle, they will ask you for the car registration number, the ownership certificate, which employee is using, whether it's a sales department employee or a finance department employee, in terms of the usage of the car. For example, practically they have asked us one question in one of the audits, saying that, the car is given to a finance personnel which will not have a field job. So how are we, differentiating the personal and business use? Though there is a fixed ratio of usage as well, but still, they do definitely ask these details. Similarly for mobile phones as well. Medical insurance, yes, it's a very risky area wherein you should only be claiming the input tax credit only for the employees and not for their dependents. In one of the cases which I'm sharing, which was in one of our clients, wherein they had specifically gone to the customer affairs as well to check the import value. They had asked for all the certificates from the customer affairs, and the NBR did prepare a reconciliation on their own, saying that your import value was X amount and you have reported a Y amount. So these are certain practical aspects which the businesses should definitely see, especially in case of imports. As I say, the businesses who are majorly into imports. So this is one of the very important points from import perspective. Other considerations are there when, the NBR, they're asking you for the bank statement, or they're asking you for your trial balance, and they do your assessment on a best judgment basis, which means that they will take my bank statement, they will see that how much amount is being credited during a particular VAT period. They will take my trial balance, they will check the account receivable during the VAT period, and they will also see the cash received or cash paid during the trial balance, and basis that, basis that for a particular VAT period or for the previous VAT periods as well, they will determine a trend analysis, and they will determine my value of supplies on a best judgment basis. And they will say that, okay, as per our understanding, the taxable supplies were of X value, wherein you have reported X minus 100. or maybe it's a completely different. So in that case, they will ask the business to prepare a proper a detailed reconciliation for that. So as you know, NBR audit is something which is very, very important, because Saudi started with doing return audits. It's not there in UAE specifically when a particular return is audited. So in case of the UAE Federal Tax Authority, they audit a certain period, which is generally from 1 year to 3 years. Bahrain, Saudi started with this return audit, and Saudi has also, started doing with these annual audits as only. Bahrain is still doing, return audits, so it becomes very important. This is a good chance for the companies to streamline, their issues in terms of VAT as well. Coming on to my next part, which is penalties and prosecutions. So this, as I was saying during.
Yeah, Rishabh, I would like to add, my apologies. I think there was some problem and I got muted actually. So, I mean, I finished my talk and then it was went to Rishabh. So I wanted to thank you all for attending as a participant. And then I want to add 2 points, which Rishabh just mentioned. First of all, the timelines which Rishabh mentioned in the previous slides, please keep it in mind. That is very, very important. Even though you are legally right, if you don't take action on time, these cases become time barred. Once it is time barred, I can tell you my experience of what's happening across. If you don't furnish on time, even though our case is strong, you lose an opportunity.
Yeah.
So the 30 days or the number of days which is mentioned, please calculate very well in advance. Take action on time. Even a 1 day, I've seen 86 million dirham penalty in UAE has been failed. 1 day delay. It was taken very lightly by the I would say a senior management or the management within the organization. They thought it's okay. It's a first time new law coming in. We are happy to pay 86 million. Why will authorities not allow us to fight? No, you cannot. Time barred is very dangerous provisions. Please take care of that. This is one, I would say, a very important point. In terms of learnings on the audits, what Rishabh said, the information request keeps changing. Now I would like to share the basis of it and why it happens. The reason it happens is because there's always a learning curve from a tax authority perspective as well. So we have seen a very simple format of requesting the information, and the format has gone into the huge rows in the columns now, because there's a lot of information which tax authority needs for them, and they learn from each audit. These countries where the law is new, the audits is a new system, they learn, and then of course when they learn, they keep increasing the requesting of information. So whatever the format today is, not necessarily will remain same. They will learn from the audit, and they would like to see that from the next taxpayers audit, you collect relevant information. So Rishabh, please continue.
Yes, thank you, Surinder, and I actually, yes.
If you can please keep me on unmute. I mean, I would like to add a few points if it's required. Thanks.
Yeah. Thank you, Surinder, and I definitely agree. What we have seen as a differences which have come in the UAE as well. For example, the FTA tax audit file format has been changed drastically. So there are new information which has been asked. Similarly, in Bahrain, though the format has been kept the same, but additional information has increased a lot. So in the first year, we had not seen practically that NBR was checking the contract specifically. Now they are going deep down into the contracts to check the date of supply specifically, because it's very very crucial for the long term or ongoing contracts, just to see the date of supply, that when was the tax triggered, when was the invoice raised, when was the tax paid. So we have seen that kind of technicality and that kind of deep diving into the contracts as well. So it's very important for the businesses, just to take note of this and action it accordingly.
Yeah, and I'm here as well.
Yes.
From my experience and through my discussions with senior members at the NBR, what we've seen is a move away from the generic questions that they were asking and more to very industry-specific technical questions. Now, there are two reasons for that. first, they're evolving internally, but also I'm sure the wider public have seen at the beginning of the year, MBR signed a very large contract with a third-party consultant. What they've also done, they've introduced a risk-based evaluation metric, whereby every taxpayer has a risk rating within the MBR. So if you have a higher rating, they will deep dive further and they will deep dive more often. So it's not only about having the information and recording it and providing it, it's what element of risk does the MBR attribute to you as a taxpayer, and how frequent will you be audited by the MBR?
Yes, absolutely. Yes, correct. So as to what Ali said, that NBR, I mean, as Surinder says, that VAT is like blood in the body, and definitely we have to clear the blood with all the impurities. Similarly, for VAT, we have to clear all the issues, because once the audit starts, definitely there is a limited recourse which is left to the businesses. Moving on to the third part, which is penalties and prosecutions. So the reason why we are discussing, I'll tell you later. So just to touch upon the administrative penalties which are levied as per the VAT law. So if there is a failure to register within 60 days of registration period, there is a penalty of up to 10,000 dinars. Penalty for late submission of VAT return or late payment of VAT, which does not exceed 60 days. The penalty ranges between 5 to 25%. For practically, we have seen that for the first time offenders, the penalty is just 5%, wherein if you delay further, like there is second time or a third time offense, then the penalty amount increases. Then submission of false information regarding imports as well. There is a administrative penalty of 2.5 to 5% of the unpaid tax, and there is a fixed penalty, which is a generic penalty, which is levied across. For example, if I'm not displaying my prices of goods inclusive of VAT, if I'm not providing the information to the NBR on time, or any other violation of the provision of the VAT law laid by the NBR, there is a fine up to 5,000 dinars. So practically, minimum of 500 is, as an administrative fine is levied by the NBR, which can range up to 5,000. Covering this tax evasion cases as well, because this has become very important this specific year, because the reason I am discussing the administrative penalties and the tax evasion cases, because there is a unit which has been set up by the Attorney General, which is known as a tax evasion crime unit. So before I go to that, I would just like to touch upon what are the cases which fall under the tax evasion. So tax evasion is basically when the assessee does not delay but completely fails to oblige. So in my previous slide, you would have seen that if there is a penalty, which is levied to register within 60 days. Now, if there is a failure to register within 60 days from the registration deadline, so registration deadline has already passed, and then another 60 days if the NBR is waiting, and even then the taxable person has not registered, in that case, the NBR can refer the case to the tax evasion crime unit. Similarly, if there is a delay in submission of the VAT return or payment of VAT exceeding 60 days from the due date, fraudulent recovery of input tax, unlawfully claiming a tax refund. So for example, if I have increased the tax refund case, or have recovered excess input tax credit, these are the cases of tax evasion. If a business is submitting forged documents or records, or invoices as well, so this particular point is important because NBR does cross verify from your customers as well whether this particular amount of sale has been made or not. So assumingly that, let's say, company A has made a sale of 100 dinars to company B, the NBR can go to company B to check whether that tax invoice has been received by company B or not. So this is a cross verification mechanism which the NBR does follow till date. Failing to issue tax invoices, And this means that, I failed to issue a tax invoice or not charge VAT, or I have charged VAT but not paid to the government. That also is a tax evasion. So this is covered as per Article 63. Article 64 talks about punishment, which is prosecution. So prosecution provision is basically imprisonment for 3 to 5 years, and the penalty amount can reach up to 300%, which is 3 times the tax due. Coming on to my next slide, which is the Tax Evasions Crimes Unit. So this was formed this year in the month of January. So this particular unit is affiliated with financial crimes and money laundering prosecution. And this particular unit will only investigate the crimes which are stipulated in the value added tax law. So the crimes are what? Crimes are the ones which are listed here as per Article 63. So any evasion case which comes up in the value added, as per the value added tax law, and if the NBR wants to refer this case to tax evasion crime unit, then the tax evasion unit will take its own recourse of action. So what I believe is that 2019 1st January was the day when the VAT law was enforced in the country. 2020 2019 was definitely a year when it was a staggered implementation as well of VAT, wherein all the businesses did not were given specific dates to implement. 2020 was definitely went into the pandemic, wherein not too much action happened from the tax authorities as well, because of course businesses were struggling. 2021 is the year, I think, every country around the globe is trying to recover. Of course there are different reasons to it, because Ali will definitely cover in his part, but even this tax evasion crime unit is only formed to see the tax evasion cases wherein there is a gross negligence from the taxable person itself. Similar tax evasion crimes unit was set up in Abu Dhabi as well in November 2020, which will only look into the money laundering and tax evasion cases for businesses registered in Abu Dhabi. And of course, in Dubai, there are already money laundering or tax evasion units which are there, and they are covered in the existing judicial systems. So this is all from my end. I would like Ali to take over from me for the global minimum corporate tax, which is the hot topic for now. Every business, every economy is discussing this particular point which has been introduced. Over to you, Ali. Thank you.
Thanks, Rishabh. Yeah, absolutely. This is a hot topic, and it is still developing as we speak, and we will see further developments over the next few months, and over the next probably 1.5 years, we will see the full application of what it means to the local economy, to the region, and more wider global economy. I think if we get into it, moving to the next slide, really why this has come about is practically, and there's been a major loss of revenue, either in terms of shifting profits from one country to another, or underreporting, or any gaps in terms of mismatch between utilizing double tax treaties, or sophisticated structures where companies are able to take advantage of tax breaks within countries to reduce the overall tax that they pay. Rishabh, if we can just move to the next slide. Thank you. So with that overview in mind, what we've seen is the OECD put a blueprint forward in terms of how do they close that gap in terms of tax leakage and that loss of revenue. And obviously what has come out is the global minimum corporate tax. where the G7 in June took a decision to go ahead with the initiative with a minimum of 15% flat corporate tax across the board. Now, what's really surprising is the reaction of the global community, where in July, so early this month, I think it was 1st of July to be specific, 130 countries have agreed to support the initiative. And what that means is now the overall framework is going to be put in place, and the final technical deliberation will be provided for the Pillar 2 approach, and that should be released in October, with full implementation expected by 2023. Now, people might say, well, okay, that's fine, but what's the impact on Bahrain and on the region, given either a no or low tax environment that we have from a corporate tax perspective? So if we go to the next slide, we just have a quick overview of where do we stand within the GCC, and then we'll move into Bahrain more specifically. So can we move to the next slide, please? If we can see here, obviously, Bahrain has a 0% corporate tax across the board, except for the oil income tax that we have at 46%. But from a practical perspective, state-owned companies are not really paying this tax. Either they have an exemption, or due to their financial projections, they're carrying forward and not paying tax. And corporate entities, a lot of them are in the upstream, and we're not really making revenue. So practically, the government's not making a lot of money from that 46% tax. So what does that mean? If a 15% tax is introduced, obviously with a 0% across the board, it would have a very high impact on the economy here. You're going from 0 to 15% at once. It will have a significant impact, not only on how you do business now, but also how you structure your existing investments, your portfolio within the country and outside of the region as well. Looking at the rest of the GCC, it varies. So the UAE has a similar corporate tax system, 0 across the board. There are some entities, again, in the oil and gas industry or financial services that are paying some corporate tax. But with a lot of free zone and tax holidays as well, it will have a very high impact on the structures that are there in the UAE. Then looking at Kuwait and Qatar, while there are some forms of corporate tax in both jurisdictions, the main target is the foreign shareholding of those companies, which will result in a median impact, because this will make it across the board regardless of shareholding. Whereas if we look at Oman and Saudi, they're more heavily taxed with a higher tax rate and a more sophisticated tax system in both countries. Oman already at 15% across the board, so more or less there's a low to no impact there. In Saudi, interestingly enough, within the framework, zakat is one of the taxes that is included as part of the corporate tax initiative, and with the CIT at 20% on foreign shareholding, there is a lower impact in Saudi as well. So there is going to be some significant dynamic change in relation to this, and we will update you as regulations come out around October time. But there will be shifting sands, if you will, from a tax perspective for the whole region. Now, what does that mean to companies in Bahrain? So if we go to the next slide. Well, in a nutshell, what I would say is really, you need to really monitor and analyze what would be the impact. Now, a lot of businesses have already, woken up and said, let's have a quick assessment on what can we do, what would be the impact to our bottom line. And do we need to look at structures that are more secure for us? So there's nothing to implement, if you will, at this stage, but it's more of a review and assess, analyze, and then based on the final regulations, look at putting a roadmap for any implementation within the organization or within your portfolio across the board. So that's a quick snapshot on the global minimum tax, and we will keep you updated as further developments come out. Now, in line with that, we move to the next section. Some of the other commitments that Bahrain has signed up to. So we will look at now where the BEPS initiative initiated, which led to ESR and CBCR, and we will touch upon as well UBO. I would say they're all interlinked one way or the other. So if we move ahead, just looking very quickly at BEPS, I don't want to go into it in too much detail at this point in time, but practically it is one of the initiatives that that the OECD has put forward, similar to the global minimum tax. And it, the report that was issued in 2015 looked at 15 action plans that need to be considered. Now, what does that represent from a Bahrain perspective? Well, you may all recall in 2017, there was a report that was issued. I think about some 12 countries were on that list, which was a blacklist of, I apologize, 16 countries were on that list, which was a blacklist for jurisdictions that were considered tax havens at the time. I think, Christian, if we can go to the next slide, please. Excellent. And the immediate reaction, I remember at the time, the government was looking to its international team at the OECD to understand why it was put on that blacklist and trying to push through the CBCR MCA agreement to make sure that they were able to remove themselves from the blacklist. So in March, Bahrain moved to the gray list after making some commitments to reform the tax environment, if you will. And late in 2018, they signed the MCAA initially. And in 2020, the MLI was also signed. So therefore, putting a commitment that Bahrain will introduce country-by-country reporting for large multinational entities that are based in Bahrain. So what does that actually mean? So if we move to the next slide, we'll take a quick overview of what does that actually mean. So who does the CBCR initiative impact? Well, generally it impacts multinationals that have a group consolidated revenue of 342 million Bahraini dinars. Now, from my perspective, I would say that really narrows down. I think we have about 60,000 companies in Bahrain registered with the MYCT that are active in the economy. My initial guess would be you're looking at somewhere maybe around 100, 200 companies once you look at that threshold. It's a very high threshold, and it's not only Bahrain revenue you look at as well, the overall consolidated revenue from various countries where the multinational exist. So when will you need to report to the competent authority, the MBR? It's 12 months from the end of the financial year. So since it was introduced this year, you're looking at reporting next year. Now, what would be reported? Well, you report generally for the ultimate parent entity headquartered in Bahrain, or if you had prior to Bahrain signing up, CBCR was introduced in various other countries. Now, if you were to reach a threshold you could have chosen a surrogate entity to do the reporting on your behalf in a different jurisdiction. So, for example, a company headquartered in Bahrain but has a significant subsidiary in the UK, for example, which was one of the early adopters. You could have chosen the UK as a surrogate and report your information to the UK authorities. Now, how would you be doing this? Well, practically you would be doing it on the same portal for the ESR, which we will go through in the following slides, the ITIES portal on the MBR. However, we haven't seen the details of what that would look like at this moment in time. We expect that towards a later towards this year to come up with further information. And obviously, like anything that we've seen, there are always hefty penalties for non-compliance, whether it's VAT, ESR, UBO, or even PDPL that we will cover later on. There are always hefty penalties for non-compliance. So I won't, we have a slide on what is the impact, but I think we'll leave that out for now, primarily because I think for the large majority of businesses, there is no impact, if you will, on CMCR. So while it is there and we will share these slides, I think we will skip this one for now. Now, in the interim, just to link the global minimum tax to the economic substance. Now, in the interim of no tax being in place in the country, one of the initiatives that the OECD had required the 16 jurisdictions that were considered on the blacklist, while they understood there was no corporate tax in those countries, they still wanted to understand what was the basis of these companies doing business. Were they shell companies used to funnel money to shift profit from one country to another and avoid or evade taxes in certain countries to optimize, if you will, their tax structures? Or were they actual businesses doing business in that particular country or using that particular structure to generate business from within an operating structure? So with that, economic substance was created, and as such, the CBB and MOSCP rolled out their ministerial order and directives in late 2018, which came into effect early 19 for newly established commercial registrations, or from mid of 19 for pre-existing businesses. Now, I just want to make a comment here. We've talked about the global minimum tax. Now, what does that mean with ESR? Well, practically, if ESR is there to report because there is no tax, the moment corporate tax is introduced, ESR effectively goes away because ESR is only there in the limited number of countries that I mentioned. So for Bahrain and the UAE with a no corporate tax status, once corporate tax is introduced, ESR effectively will be removed and there will be no ESR compliance thereafter. Now, if we look at which entities that need to comply for ESR. Now, obviously, last year, a lot of companies have already complied and filed with the relevant authorities. But just to brush up what we put forward here, obviously, if you're a CBB regulated entity, you would need to report to the central bank as of last year. And if you are a business that is primarily in one of these activities, distribution center, head office activity, holding company, and so on and so forth, you can see the list there. You needed to have filed with the Ministry of Industry and Commerce. What I've seen from a practical perspective, many businesses didn't actually comply until the ministry notified them that their CR was blocked. They were unable to renew their CR, and they needed to file. Now, what I've understood, no, there hasn't been a very detailed audit of the submissions. practically all these companies have submitted, and the ministry then, similar to VAT with the MBR, the onus is on the taxpayer to file, and the government will then accept your file, more or less. There have been cases when they've gone back and asked for further information, but more or less they will accept. Upon review, if you are effectively seen to be non-compliant with providing either incorrect or falsifying information, then they have the right to audit you and take it to a further scrutiny. And we expect if I would say if corporate tax only introduced sometime in 2023, with the peer review of the OECD coming up for Bahrain next year, there is a potential that there will be further scrutiny upon this topic in terms of ESR and also for the UBO, which I will cover in the next following slides. We can move to the next slide, please. Actually, can we move to the one after? I think that we've already covered this one. So from a just recent update, so practically a lot of businesses we've known, the reporting period for most businesses was March 2021. It is really 1 quarter after the end of the financial year. Now, for those that have already filed in March, you would have been notified by the Ministry of Industry and Commerce that you need to resubmit. However, you need to resubmit on the electronic portal, the ITIES MBR submission portal. The initial submission was supposed to be in May, then it was extended to June, and now extended to the 31st of August. So just keynote date for everybody. Let's save the date for 31st of August to make sure that is up and running. If there are further extensions, we will make sure to update you as well. Now, from a non-compliance, similar to what we saw for CBCR and again, what Rishabh covered for VAT perspective, there are hefty penalties for non-compliance, and with the intention of further scrutiny expected in the next 12 months, it is crucial that you make sure you have actually reviewed in detail what you're submitting, and if ever whether it's the MBR or other competent authorities, if they ask for further information, you have the supporting documentation to validate what you have submitted to the MBR. Okay. And I think the last topic under this category is the ultimate beneficial owner. Now, what I will say before getting into it, I think this initiative is actually not anything new. Although we say the order came out in July, actually practically it goes even before that. In 2018, the government really signed up for this, but it never made it a mandatory obligation for businesses to comply. But fast forward to 2020, it has now become a mandatory obligation. And it is one of the commitments of Bahrain to be in line with the anti-money laundering developments of the FATF and its commitment to honor the international standard. Now, that means there needs to be, greater scrutiny on who owns a business, who manages the business, who controls it, and the movement of shareholding and controllers, if you will, of a business. Now, practically what I've seen from my experience previously, that there is at the moment, similar to ESR, there are submissions being taken on board with the minimum validation at this point in time. But again, with the peer review coming up, and given if you look at the FATF standards, there are obligatory audits that the FATF require governments to undertake. And if you look at the regulations that have come out, the MOICT will eventually start looking into doing audits of submissions and making sure that you have complied. So while the business community might have taken this topic, I would say, as a tick the box very lightly, it is required a very thorough assessment of what is the impact of UBO. So who can be a UBO? I think we've simplified it here to sort of 8 categories. So it could be a shareholder, anyone that owns more than 10% shareholding. Or it could be someone that has effective control over the business, does not own directly 10%, but indirectly through structures owns more than 10%. It could also be a board of director that has the ability to influence decisions on a company. It could also be executive management, so a CEO, CFO, depending on the level of authority provided to that executive management. It could also be a trustee. It could be someone that has delegated authority via a power of attorney, as an example. It could be undisclosed benefactors. So the typical example you find in this part of the world, you have a father who is actually benefactor to his children's business. While they run the business, because he is funding the business, he has overall effective control. Or it could be typical arrangement that you find. You have a silent partner and you have an active partner. The silent partner is the name partner on the commercial registry, and the active partner is sort of behind the scenes. Now, what you have seen with the MOICP update recently is that is considered concealment and is illegal. And any business conducting such activity needs to also look at their structure and rectify their situation as quickly as possible, because it is under the microscope at the moment, and there are heavy penalties for concealment. And this sort of covers uncovering who has that concealment by looking at contracts and any supporting document. Okay. So if we go to the next slide, we look at what's the format of declaration. Now, the form is actually very, very simple, and the supporting documentation is really just anything to validate the identification of that person, whether it's passport or ID card. And it also does ask for tax information for anyone that is a non-resident. So if you are, for example, I will use the wrong term, I would say, if you're an NRI, but technically that's not 100% correct. If you are also tax resident of India, where you are registered and you have your PAN number, that information will also be provided to the tax authority, or apologies, to the competent authority. Now, at the moment, there is limited validation upon submission. It's just seeing that you have submitted some information, but there will be further scrutiny expected over the next 12 months. And I think finally on this particular topic, if we look at non-compliance, many businesses would have seen the first level of non-compliance, which has been suspension of CR. And now the government hasn't levied any financial penalties as of yet. We are expecting probably this year or at the latest early next year, any non-compliance will be hit with financial penalties, because this has been around now for over a year, and businesses have had time to really digest what that means. Now, it's something interesting to understand. Compliance here is not just an annual exercise. While annually you will need to revalidate who the UBOs of the business is or are, it is an ongoing exercise no matter what happens in the organization. So as an example, anytime you have a new shareholder, you would need to update the UBO information. Anytime you have a change of authorized signatory where the authority matrix of the new delegation has overall control, whereby making that person a UBO, you will also need to update the information. If a UBO has left the organization, you will also need to update the ministry that the UBO has left the organization. So it's not just an annual exercise, but it's a fluid exercise that you need to monitor on an ongoing basis. And anytime there is an effective change of UBO, you have 30 days to update the ministry. Failure to do so, and they can validate that there is failure, and there are many ways to do an audit to validate that. They can also levy penalties, so they start with 1,000 BD per day from the moment that they find that you have breached, and it can go up to a maximum of 50,000. And given the current economic situation, you really don't want to be in a situation where you have inadvertently allowed penalties to be applied unnecessarily. And obviously, for businesses that are seen as repeat offenders, they will have their commercial registry stricken off, and that has further ramifications, not only to a business, but potentially the UBO themselves. So if we are effective management of a business, our due care to our shareholders, the owners of businesses, if one business is stricken off, there is a domino effect, and it could leave a black mark for shareholders across portfolio companies as well. I think with that, I think I've covered quite a bit from a regulatory perspective across various topics. I think I will hand over to Surinder for a few words, and then we move on to PDPL. So Surinder, over to you.
Sure. Thank you, Ali, for great insight, I would say, in this all 4-5 topics. Just to add a few points from my side. Global minimum corporate tax, why is it coming? Why it is in discussion? Why it is being coined by 130 plus countries? So this is a larger issue which has been there for many, many years, started with all these Amazon to Facebook to Google and different new industries, which has been playing with the profits. I have to say playing with the profits because there are structures, there are ways to minimize your profits legally, right? Now we need to sort this out. We need to have a solution to this, and that's where G7, G20 all comes in place and has been going in that direction. Now, why it is very important for us in GCC and especially for Bahrain and UAE. I'm again, using UAE and Bahrain because both are in a different, or I would say both are at the same footing. No corporate tax in UAE, no corporate tax broadly in Bahrain. There was economic substance regulation in UAE and Bahrain. UBO rules in UAE and Bahrain. CBCR we already seen from 2 years. So now I would share my learnings and I would say what Bahrain is going to see, because we have seen that. CBCR, yes, it's with a very heavy and large threshold, but if it is applicable to you, it's very important that how you manage to that. It has a link with economic substance regulation, with your CBCR reporting, and how you are going to manage your business profits in the taxation in different jurisdictions, because it's all about if you're having a presence in more than one jurisdiction and you have a threshold, the CBCR will kick in. So we are seeing that from 2 years in UAE, all the local companies in UAE who had never seen CBCR in the past. However, their presence was, and their threshold is definitely above the minimum threshold. I mean, the revenue is above minimum threshold. They had failed to file the CBCR notification in the report in other countries. Now, CBCR is in UAE from 19, is coming in Bahrain from 21. However, it's there from 16 in Australia, UK, many other countries from 16, 17, 18. It's there from 16 to start with. When you fall into this definition, you would realize that you were supposed, as a group, you're supposed to do a notification in the report filing in Australia if you have a business and you fall in that threshold. So the impact is not only in Bahrain, but you will see impact in the countries where you operate. And we have seen this from 2 years in UAE. Now we have settled the position for the businesses to see how they do their notifications and the filing in those countries where they have a business and they were in the global on a consolidation basis, the threshold. You will see a big challenge in arriving at the threshold. Now, how you consolidate your financial statements, how your shareholding is being driven, and how the number has to be arrived at, you will have a lot of challenges in that. So if you fall in that threshold, please start early, because it will help you to understand your own business well, understand your structure well, and will help you to really comply on time to the extent you can do and to avoid the penalties. Coming to ESR, Ali mentioned very important point. The OECD, the ESR is coming from BAPES initiative, coming from OECD. Now OECD will come and do the audit and see how the ministries are implementing ESR. So we have seen in UAE where ESR laws were there, they were amended substantially, I would say, because the substance was still missing in applicability of ESR. And then OECD, to my understanding, is undergoing, I mean, there's an audit or the inspection or the review of implementation of ESR by the ministries is underway. So that means it's a very serious topic, and it's been seriously taken by OECD to see that all the countries, UAE, Bahrain, BVI, Cayman Island, Isle of Man, whoever have brought ESR, are they really applying ESR, or it just for the sake of formality? So as Ali rightly said, that will happen, and it will become more serious as we go. On these things, and the UBO, coming to the UBO is ultimately going to the shareholders. What is all this? I mean, why are these coming in piecemeal, and where it all ultimately goes? It all ultimately goes to see that, you know, we need a tax effective geographies, countries. We need to see that every country definitely does a proper compliance to it. So it's very serious. I would say plan your businesses. So I would say plan your legal structure, plan your shareholding structure, plan your transaction structure, and your execution and monitoring of that. It's a journey, and we have been doing a tax structuring exercise for many businesses now from 1.5 years in UAE after VAT, CBCR, and ESR is in place, because it's a need for them. It's very important. So where it is ultimately going? It is ultimately going to go into the transfer pricing, where you will ensure that profits are not shifted, right? And it will come with a lot of compliance. It will come with a lot of understanding in how you manage your businesses, how you have your accounting policies. So it's all going to be interconnected. So the role of us, I would say proudly, you know, as a chartered accountant in the region, the role of chartered accountant is going to enhance. It's not only about accounting where, you know, we do a debit and credit effectively done by any systems, but it's all about applying the technical knowledge, applying the accounting concepts, the principles with a taxation. So you need to understand both are interlinked, and it will be soon a day where, you know, the technical knowledge will drive the business, because you need to see that you apply in your systems, apply in your transitions, and you have a core team to take care of all the compliances. It's a journey, and it's a beginning of a journey, like I said in the beginning. So yeah, I mean, not to scare you, I honestly believe that, you know, these are all part of the business. We are here to do business, and these are all the parts and parcels of the business. Just plan about it, and it's not difficult if you understand well on time. So not to scare, but just to plan. I would hand over to again CA Ms. Rima for introduction to Abhik, and Abhik to go on PDPL. So I was talking about PDPL again. I go back to there was a mic. I mean, my voice was on mute. So this is a new law which we all know is coming in Bahrain. Abhik has been working on this, and you will have a lot of learnings for sure. The other thing which I was mentioning about during my introduction was MMG's Datafy. That's a different thing. It's a technology company where we do the data analytics, science, and machine. No link with this, but my reference was data is a wealth. Today, data is wealth. This information, how you handle, is coming with laws, the provisions, and the regulations. So it's very important that, you know, we manage well and manage right way. Over to you, Ms. Rima.
Thank you so much, Mr. Jansari. Thank you, Rishabh Tandon, for such an insightful session on VAT, and Mr. Ali Al Mahrous for such a knowledgeable session on global minimum corporate tax, Bahrain economic substance requirement, and country by country reporting, and finally, the ultimate beneficiary owner law. Our next session is going to be on personal data protection law, and is going to be presented by Mr. Abhi Gupta. Abhi Gupta is a director at MMJS and leads the management consulting vertical focusing on the GCC region. He has over 28 years of experience across Asia, Europe, Middle East, and Africa in multiple capacities. Abhi, has held senior business leadership positions, including board memberships, and has been an advisor to several companies across the region. Since we have overshot the time by around 20 minutes, we'll have to reduce this session to around 20 to 25 minutes. Thank you.
All right. Thank you very much for the warning. I'm going to try to keep within the time and also not scare you so much. Ali and Rishabh, awesome presentations. I learned a lot. So thank you very much. This is also compliance in certain ways, like Surinder mentioned. I don't know how many of you noticed when the recording started for the Zoom session, there was a ticker across the screen which says recording has started, and it gave you the option to leave, right? That's personal data because we are recording your information and it requires your permission. Now, in certain cases, this information carries forward being sensitive information. Again, coming from a lot of us come from the South Asian origin, so we might be aware of what's happening internationally. Actually, this is acquiring a lot of importance, especially in the digital world. So you may have noticed or you may have read about MasterCard being banned by the RBI from acquiring new customers in India, which is a huge blow for an organization like MasterCard. I mean, India is a massive market. And the reason given is that they were not compliant with customer information. Similarly, you may have heard and read about IKEA being fined, a few millions actually, in France for actually overstepping their limit for employee information, which means if they were recording employee information without their permission, even that falls under the purview of the personal data protection law. So actually, and the reason why I'm mentioning all of these is to give you a perspective that it's got a pretty large and wide perspective in the context. Let's not just think about if I'm collecting a certain amount of customer information, that's personal data. It's actually personal data, whether it refers to any entity, any individual. Okay, so whether it's the employee, whether it's a customer, whether it's a partner, it applies to everyone. So think about it this way, that if it's such a large construct, it's not just a law. Actually, it's a system, right? So we've got three entities. We've got the individual, there's the corporate, which the PDPL calls entity, which is the corporate organization. And then there is the authority, which is expected to monitor and implement this law. Now, the individual whose information we are using or sort of collecting needs to consent for the use of the information, needs to know what you're going to use the information for, how it's going to be processed, where is it going to be processed, who would be the past partners, and in case they do not want this information to be shared, then they have the right to opt out, or in the case of grievances, they need to know which institutions to reach out to. So that's from the institution point of individual point of view. From the entity or corporate point of view, the law mandates the setup of a data manager, ensuring that there is a system in which data that is collected is protected. It applies both, by the way, to what you have within the organization and what you are sharing with partners. So imagine, I'm just sort of giving examples as we go along. Imagine that you are sharing information with of your customers to run a loyalty program, right? that's a partner and it's going outside the company, you have to ensure that the compliance is equally maintained, and it is incumbent on you as the recipient of the information to ensure that those roles are followed. Maintaining the records of access, so in case there is a breach, you know how and where it happened. Regularly monitor the process. There has to be a breach policy. You have to have a sort of a protocol when you how to handle breaches, and more importantly, you have to raise and train the stakeholders within your organization to be sensitive about information. It's almost like you have to respectfully, or we have to respectfully sort of handle the information that someone is actually entrusting with us. And then, of course, there is the supervisory sort of role of the authority, where they obviously need to have supervisors who would ensure that the whatever has been prescribed is being followed. Companies are compliant, ensure that they have the structures in place in order to manage data, to handle breaches, and obviously, like, and I was hearing Arli's presentation on tax, and Rishabh talking about. I mean, the structure is very much the same in the sense that you have organizations which are sort of high risk operations, which have a lot of data throughput. Obviously, those would be monitored much more closely than the smaller ones. But the fact of life is that it applies to any organization, regardless of size. I think that's the sensitivity that I'm trying to bring about. Rishabh, can we go to the next slide, please? So, let's look at what's happened in Bahrain. So, Bahrain has followed the European model. In fact, just to take you back to the history of the PDPL, pretty much most of the countries who have been implementing the personal data protection law have been following the European GDPR model. So the European GDPR model was actually voted by the European Parliament in the last quarter of 2015, and it was enacted as law in the beginning of 2016 by the various countries within Europe. That's where the genesis is, and it's gone about its share of evolution. And obviously, each country has kind of adapted to its own operating environment the way they deemed fit based on the guidelines. Bahrain, kind of followed this model, and very much like other countries. So in 2018, in the law was formulated, and in August 2019, actually the law went live. So as we speak, actually the law has been implemented. The expectation was that obviously in 2020 onwards, the compliance would start. Obviously, we know what a year 2020 has been. There's been lots of ups and downs, and COVID has obviously impacted implementation. So it's kind of, we are expecting. There are lots of consultations. In fact, there are about 8 further regulations which are being discussed as we speak. And if I understand correctly, they've already been drafted, they've been discussed, and most probably by the next quarter or so, we would expect them to be being released. And the expectation is that there is a structure that is being put in place, and therefore 2020 onwards, the authorities would be seriously looking at governing the regulatory structure. Mind you, the penal structure is as severe and as serious, and I think this is what Surinder mentioned. Even here there are fiscal penalties, and there is imprisonment. Depending on the type of breach, whether it was willful, inadvertent, or why you did it. So there are different reasons, and obviously the severity of the punishment depends on that. But fact of life is the owners, the corporates are liable to to the authorities to ensure that they're compliant, ensure that they are they are handling the data correctly, and especially think about it in today's digital age where we are looking at shared services, where when we are looking at cloud services, when we are looking at partners for sharing data, this becomes extremely important because inadvertently you are sharing information. So we were discussing in the office the other day. We were talking about the case of a school where a school sort of approached someone for PDPL because actually they are collecting information of students. They have information on parents. You have health records. Each of these are are pieces of information. In fact, they are categorized. They would be categorized as sensitive information because you're looking at ethnicity. All of these are considered sensitive information. So the point I'm trying to make is that there is no business which is beyond the purview of this law, and each one of us in our own way would have to ensure that we are compliant. Rishabh, can we go to the next slide, please? So that's so much for the law, but the question, again, pardon me for having a management consultant hat. I'm not trying to put on a accounting hat, and I'm thinking about it from a business point of view, saying what is it for the business owner? How does the business owner think? So if I were to put myself in the business owner's shoe, the business owner says, okay, someone's telling me to implement a system, right? Now, how much is adequate? Is this just implementing a system like any other program, or is it a change of culture, right? How do I ensure that I take the organization along with it? How do we ensure that this program just does not fizzle out, but it's sustainable? What is the structure that I need to put in place? And obviously, as an owner, I'm going to spend some money. Going to spend a fair bit of money to comply. So how do I ensure that this actually becomes a catalyst for me to help my business? Can I go and do some things which can make my business more streamlined? Maybe I can become faster. Is it an opportunity for me to review my processes? So who should participate? How should I participate? What do I do with what my current my current projects? Do I need to restart them all over again? See, each of these questions are ones which would come to a business owner, and you would have to, as a CEO or a CFO, have take decisions or help the company to take decisions. And mind you, each one of them have timeline, financials, financial, and also compliance related implications. So the point I'm trying to make is that from a business point of view, when you are looking at an implementation, just like VAT was, similarly, PDPL is not just about, implementation of just a system. It's actually altering, it's in some ways managing change within an organization, which means you have to take also people along with it. I mean, just think about it. There is a whole company which is collecting information using user information. Now, every part of that chain needs to be sensitive to the fact that they have to handle personal data sensitively. It's not just about a person who's the data manager being responsible for something. You have to have every part of the system participating in order to make sure that the process is a success. So it's challenging to clients, and from a consulting angle, we see sort of three elements to it. There is the law, which means we need to know how to comply with the law. There is a second part, which is the process part of it. So saying, how do I manage the processes within the organization? And the third is the systemic part, which is how do I implement a system to ensure that I'm being able to, I'm compliant at the same time being efficient. So, as we go along, what I'm going to try and do is focus on these three things and explore what are the solutions that would be required. Rishabh, can we go to the next slide, please? Okay. So typically, if you look at data protection, just think about the process of how data moves. So first, very logically, you would collect data. So when I collect data, I need to take consent. I need to issue a notice. There is a choice, just like we saw. We were given the option in the Zoom meeting to say you can leave, right? So there, we have to ensure that there is choice. Then I've collected the data. Then I'm going to use the data. I'm going to process the data. So I'm going to ensure that I use it only for the purpose that I have said that it is going to be used for. I need to be accurate. I need to ensure that data, I need to maintain integrity in the process. I cannot, fudge data. I cannot change data. I have to ensure that the data is sort of, the data quality is maintained. And, obviously there are no secret records. I don't know when you, I'm sorry, I'm digressing, but I can't help mentioning. I don't know if any of you have seen a program called Social Dilemma on Netflix. It's on the new age information companies and the kind of information that is being collected about individuals, right? So this whole kind of secret records and the whole objective of the PDPL is to ensure that there is transparency. There are no secrets, right? So obviously, that's a very important sort of pillar in this process. Then obviously you have storage. You're going to store the data. You're going to ensure that it is sort of secure, it's protected. Now, how long should you keep the data? Imagine that you got a CCTV, you got people, visitors coming in, right? How long should you maintain the data? For 7 days? For 1 month? If there are certain individuals who visit your office, do you need to inform them that that I am collecting your information? I mean, imagine each one of these have to be sort of thought through from a legal point of view and from a process point of view, right? And then obviously, who wants to participate, you sort of keep the information, you're correcting the information, and you're storing it, and then you're transferring it or you're destroying the information, right? So who can access the data, who can disclose the data, you can transfer or destroy the data, right? So this whole process sort of requires, Rishabh, if we can go to the next slide, please. Yeah, requires, we feel, 3 basic processes. The first is assessment and design, which means where do I stand as a business? Where are the points that I'm collecting information? What do I need? Am I compliant? What do I need to be, need to do to be compliant? What are the processes in place? Where are the possible sort of leakage points? And obviously, what is the most efficient system which will help me ensure that I am compliant with the law? That is the assessment and design part of it. The second part is implementation, but implementation not in isolation, but training and implementation, because as we said, this is change management. This is ensuring a process of change within the organization. And I cannot sort of underscore the importance of this, regardless of what size of the organization. It doesn't matter whether it's a small organization or a large organization. It it depends on how how well the team takes to protecting this information. And then after you have implemented a system, obviously there has to be a process of maintenance, and maintenance on 2 fronts. One is ensuring governance, right? You've got to ensure that just like we have corporate governance, this system also requires governance, because essentially you want to ensure the integrity of the system and what you're doing. And the second part is, obviously, there is there would be regulatory changes, there would be reporting requirements, there would be improvements that would be required from time to time. And the question would be, who would be able to sort of help take this system forward, make sure that you comply to the processes. If there are breaches, reporting them. If there are improvements to be made as required by the law, who's going to do that? So there is a regulatory change and improvements part. So which we have kind of clubbed into a section called governance. So we look at it as three broad steps: assessment, training, and governance. Now, what we have seen from experience, and we've been sort of working and talking to very intimately to GDPR experts from Europe, talking to legal experts, and what MMGS would like to do, and what we're planning to do, is to provide a comprehensive solution to clients which can take care of all these modules depending on the size of organization. So the solution, while the solution is typical to industries because each industry has its own challenges, the depth of the solution probably needs to be tailored to the size of the organization. So we would love as an organization to engage with clients as we go about. We are putting a team together to be able to provide the solutions to our clients, and as we go forward, we will be looking forward to engaging. So most of you as CFOs are probably also responsible for compliance. So we look forward to engaging with you at some point in time to discuss how we could help you. I hope, Rima, I have been short enough, or I have kept to my time, tried to keep to my promises, and over to questions and answers if there are any.
Thank you so much, Mr. Abhi Gupta. It was indeed a pleasure to hear about the personal data protection law, and your reference to the social dilemma did make it way more relevant, and I could really trace stuff. Thank you so much. We'll now move to the Q&A sessions. Due to the time constraint, we'll try to take as much as possible, but we may not be able to take all the questions. So I'll start. The first question is for Mr. Ali Al Mahrous, and the question is from Mr. Pavan Jain. Can I know the UBO deadline in Bahrain?
Yeah. Practically, there are no deadlines as such. As I mentioned earlier, the exercise is an annual exercise at a minimum. So when you renew your commercial registration, you must inform the ministry who are the effective UBOs at that point in time. However, as I mentioned, if there is a change in UBO at any point in time, you have in 30 days, you must inform the ministry as well. So let's say a shareholder exits the company, they were identified as a UBO prior, you need to remove, and the new shareholder coming in has become a new UBO. Or if it was a board of director who has joined the business and they have effective control, they are also a UBO. You must, so within 30 days of any change, you must update at a minimum once a year as an annual exercise.
The second question is by CA Shelley Paul. What is the format of ESR returns, and from where we can get these formats, where we should file the ESR returns?
Yeah, so I'll take that question. So the format, you can go to the Sigilat portal, to the Ministry of Industry and Commerce website. There is a section for ESR. You can download the Excel file. Please note, you cannot send the Excel file anymore to the ministry. you must now log into the ITIES portal on the MBR. It's not working at the moment, so you need to check back in August, but effectively it will be an electronic submission to the MBR. However, you can still go and download the Excel file just to understand what information you need and what you need to prepare before your submission.
Third question is from Mani Lakshmana Murthy, and he wants to know what is the final purpose of the data being collected in the economic substance report. He says that it's either with CBB or MOICT. He would like you to elaborate how the collected data will be used.
Yeah, I would like to add on a broader aspect of economic substance, the intention of it, how this data will be used, and how I think there was a question even how it is linked with the transfer pricing and what is the way to this, right?
Ultimate goal.
Ultimate goal. So ultimate goal is to see that economic substance regulations having a word called substance. So it is very important that whatever we do as a business, is there a substance to the business which we are doing in a country, or we have used a particular country for us to establish park our profits and to see that we don't pay any taxes. Like Bahrain is not having any corporate tax. So if I establish my legal presence, I undertake a transaction in such a manner where there is no substance, then that means economic substance regulations are not complied with in a way. That means what? Now let me give an example. So if I have a company based out of Bahrain, and I have one person actually running the show. I do a trading business. I buy the goods from China. I send it to Europe, say in Belgium. I'm actually running this business from Bahrain with one person. I'm booking all my revenue in Bahrain, and I'm showing cost of that, and I'm actually showing a profits in Bahrain, and assume the amount is 30 million BD, right? Or you say 50 million BD. I cannot actually manage such a huge business by in Bahrain with one person, right? So what I'm doing actually, I'm actually trying to book a revenue in Bahrain and a minimum cost in Bahrain, and I'm keeping bulk of my profits in Bahrain where there's a no tax. Is there a substance? I cannot manage so much of business with one person, so I need a proper substance to do it. That means I should run the business in Bahrain with adequate resources, adequate management, and adequate cost should come in Bahrain. I should not just play with transaction in such a way to manipulate and put profits in Bahrain when there is a no tax. Now, what is the ultimate objective is to see that we do. So, what is a if someone is doing this? How do we take care of this? It is not going to be acceptable to other countries where you are actually, and say to manage this business, I have a team sitting in India. Okay, to manage this business, the ordering, placing the purchase order, collection, managing everything is happening in India, so any other country. Now it's not acceptable that I'm doing a business in Bahrain, doing other functional activities in other countries. So ideally, I need to do a FAR analysis, functions, assets, and the risk. What are the functions performed by each country? What are the assets employed in each country, and what are the risks assumed by each country? And accordingly, I need to do a benchmarking to see that each country should get their fair share of profits. So that means Bahrain is not the only country where profit should sit. I should see who is managing my China local business, what is happening in India, what is happening in other countries. So I need to do a proper functions, if we call it as a FAR analysis, to see that how much is the profits attributable to each country. And this goes into the transfer pricing regime where I need to do a FAR analysis to allocate a right profit to each country. So there is a linkage from ESR, which is a collection of information, how you manage the transitions. And there are set of activities which are relevant activities in ESR. So it's not applicable to all, but it's a relevant activities. And how are you having a substance to each of the activities? So ultimately, it is very important that how are you attributing the profits. Net objective is that profit should not be put in a country where there is no tax or low tax.
We'll move on to the next one. With corporate tax to come in, more companies are being formed now in DIFC/tax haven countries, resulting in outflow of investment from Middle East. How will this impact the tax regime and Middle East? From
Yeah,
Mr.
very important.
Rajesh Krishnan.
Yeah, very important. I'll take this. It's very interesting question, I would say, and it has linkage with ESR as well now. So let me just mention, what used to happen in GCC or Middle East and say UAE. A lot of the corporates who come or who does business in UAE or GCC countries, they come from some other countries for a holding structure. Either they set up their holding company in BVI, Cayman Island, or I would say predominantly BVI and Cayman Island, holding companies there, and you come and put up a subsidiary or a branch in these countries. So ultimate shareholding structure remains in BVI. Now with economic substance regulation coming in, we need to prove that what am I doing in BVI? What is my economic substance in BVI? If I don't have a substance, then what I am doing in BVI? So there is a linkage of companies moving their headquarters from BVI or Cayman Island to the country where they do business. Now, very interesting question, why DIFC? DIFC has been here for many years, has proved itself as a more regulated, more controlled and governed regulatory body, and many companies are moving their headquarters or the holding company from BVI, Cayman to, I would say, DIFC or ADGM, which is another financial free zone in Abu Dhabi. So they set up the holding companies here. Now there are 2-3 angles to it. When any company is set up in DIFC, so DIFC has given a lot of provisions with respect to the tax exemption, the corporate tax exemption. So you might get an exemption for many years or the few years under the corporate tax regime. Now we don't know what is a corporate tax regime right now because the law is not there. I mean, the law affecting the corporate tax is yet to come in from a larger perspective. So that means to what extent the companies who are setting up in DIFC will be exempted, because there are 44 designated, or rather I would say free zones in UAE. DIFC is one of them. Jebel Ali free zone is another. Dubai Airport free zone. Each free zone have given some relaxation in terms of number of years of tax exempt under the corporate tax. Now, when the corporate tax will be introduced, we will come to know what each free zones will be exempted to what extent. So we need to see how it is going to happen in the corporate tax. Why the companies are setting up in DIFC? Because of economic substance regulation, companies have to move from BVI to this part. So DIFC is proven to be more regulated. Then there are corporate tax exemptions in DIFC. So it is definitely going to benefit them. Very important reason why companies are coming to UAE. I think nobody had paid attention when the companies were going to BVI. See, UAE has a double taxation avoidance agreement treaty with many countries. If I have a company in UAE and I do a business with India, I have a treaty, so I can take a benefit of treaty. There are a lot of benefits on the treaty with respect to withholding tax and the transitions where you have a deduction of tax. BVI or Cayman, when the companies were registered in those places, there is no treaty. They are purely tax haven. So UAE, I would say, or Bahrain, for example, these are not tax haven. There's no corporate tax right now. But yes, in terms of treaty, there are a lot of treaties from UAE, or rather between UAE and other countries. To take advantage of those, companies are preferring to register in UAE. So DIFC is again in UAE. So the impact of all this is, like I said in my earlier discussions, that a lot of businesses are becoming mindful of how they structure their business, how they do the legal structuring. So for example, we have seen many companies in Saudi Arabia or UAE or Bahrain or Oman, they have their subsidiaries operating in different countries, and who is a holding company for them? Another operating company, which is not a viable, which is not a sensible structure. The sensible structure is you have a holding company. That holding company is having the subsidiary companies who are operating companies. You need to take care of risk from many angles. If one operating company is having some legal problem, it affects definitely other. I mean, you need to have a right structure for your UAE operations, GCC operations, Middle East operations, outside Middle East operations. You need to diversify yourself in such a way that you are not dependent on one entity to get impacted if something happens to this one entity, right? So there are many angles why the businesses are moving from one country to another country. Since there's a specific mention of DIFC, I wanted to put DIFC on the center and give the illustration around that. But the net point is, it's very important that you put your structure right. To put structure right, you should know what is your objective, what you really want. So there are tax angles, there are succession angles, there are legal angles, there are when the CBCR is coming, you want to put some entity as part of it, but then how the consolidation is. So now there are not only one angle, I mean there are 7 to 8 angles when you decide your tax structure. So the impact of this on the Middle East is that yes, a lot of restructuring is happening, and this will continue for next 2 to 3 years.
Due to the time constraint, this will be the last question that will be addressed, and that will be picking up from PDPL. PDPL requires consent, but in surveillance camera, how can you ensure that? The question is by Vatsala Kumar.
Okay, interesting question. One is the PDPL specifically mentions that surveillance cameras are included in personal data protection. So you may notice when you walk into certain offices, there is a very specific notice which says that you are under camera surveillance, right? And you are expected to inform the person who comes into the office or location or area that there is camera surveillance. That's one part of the story. The second is, and I was actually talking to a European expert, and in fact he related this incident to me, that in certain cases there was a sort of a company where you had very sort of high profile CEOs and CFOs walking into and it was a legal firm, and they had a surveillance camera. And when PDPL actually came into being, they realized that the surveillance cameras, which was obviously filming whoever was coming in through the door, they were actually expected to inform each of these CEOs and CFOs, and they were actually expected to have a list of this and being available to the authorities. Now it became a problem. A lot of the dealings or a lot of the discussions were confidential. So actually they went through the law and they kept the videos for the minimum amount of time. So let's say 7 days, and then destroyed the footage. So they agreed that they would keep surveillance cameras or videos for only a certain length of time, which does not contravene the law and does not require consent, written consent from the people. Now, it varies by country to country. It varies by implementation. But yes, the answer to your question is it does fall into the purview of PDPL, and one has to go through the details in terms of implementation to see how best to do it seamlessly without affecting movement, but at the same time also not contravening the law. I hope I've answered the question.
Thank you so much, Mr. Abhi Gupta. I would now like to end the session and thank our esteemed speakers for the event, Mr. Surinder Jesrani, Mr. Rishabh Tandon, Mr. Ali Al Mahrooz, and Mr. Abhi Gupta for taking out their valuable time for enlightening us on the tax and the regulatory aspect for business in Bahrain. Special thanks to CA Ajay Kumar, Chairperson, and the entire executive committee for planning such insightful and informative sessions for its members. And a special thanks to all our members who made a wise decision of taking time out on a Saturday evening and attending the session. Thank you so much. I would now like to hand over to CA Ajay Kumar for the exciting Kahoot quiz.
So very, very insightful session indeed. I think quite a lot of information. I mean, in fact, to be honest, before the session started, we were receiving some feedback from some members, that the coverage of the topic should be in a little bit in depth so that people get a bit of information. So I think there's no reason to complain from anybody. I think it was a very, very insightful session. So now the challenge is to check how many of the people have been attentive. So that's why we started this process of doing the Kahoot quiz. So where we take some questions based on the coverage that was done during the session. So I will probably share my screen so that members can probably start. So you can keep your Kahoot app ready. So as I just set up my session, just a sec. I hope my screen is visible.
Yes.
Okay, cool. So basically the same format, I think members are already familiar with this. So we will be running it as the first name and the membership number. So you can start logging in using your membership number and first name. Hey Nisha, I think your membership number is missing. You can probably exit and join back again. I also take the opportunity to thank, as the members are logging in, to Ms. Farheen from MMJS, who has also been coordinating with us. We see a mystery winner there. So the mystery winner will not win, so because the membership number is compulsory. So the last 1 minute or so, and then we start. We have a lot more participants online, so okay, so not much movement, so maybe I will just start straight away. So here we go. The first question is, which independent committee is established to cater to the tax appeal cases in Bahrain? Tax Appeals Review Committee, Review and Appeal Section, Tax Evasion Crime Unit, and National Bureau of Revenue. Okay, so majority have got it right. So some have maybe got confused. So let's see the standing. So CA Vineet is on the top, so followed by the MCA herself. Excellent. So we go to the next question. Within how many days can an objection be made to the Tax Appeals Review Committee against adverse order by the NBR R&A section? Okay, so again, there's a big, most of the people have got it right, but I think there was a big number of people who got it at 15 days. I think this was clearly covered by, I think, Rishabh during his session. So that makes some changes in the order. So, but see, Vinith remains to be on the top. We go to the third question. Penalty for failure to obtain VAT registration within 60 days of registration period is, what is the amount of penalty? Is it Bahraini dinas 10,000, up to 10,000, 5,000, or up to 5,000? So there's a difference between 10,000 and up to 10,000, or 5,000 or up to 5,000. So that is the nuance in the question. Great. I'm happy that majority are getting it right, but still I think there are few wrong answers here and there. So let's see if there's any change in the position. Yes, that makes a change. See, Joby has joined the top, and see Rajesh, Gaurav, Sanjeev, and Vinit. So this is a true or false question. Input VAT paid on medical insurance premium related to employees' dependents will be disallowed by the tax authority. It's something I took from the slide that was being displayed. That's good. I think so. It will be disallowed. That's the right answer. So I don't know that doesn't make any change in the position standing. So next question, number 5. What is the current rate of corporate tax in Bahrain? So this is the highest rate that was mentioned. I think especially which is being given by the oil and petroleum companies. So people have been paying attention. I was expecting a tough fight for 0%, but I think still most majority have got it right. So small changes to the top 3. We go to the 6th question. Which of the below is not part of the 15 final BEPS report released in October 2015? It is not part. Kind of the answer is appearing in front of you, but it takes time to read. So this was not allowance, it was supposed to have been avoidance. So that was the trick question there. So I think a lot of people didn't pick that up. So we have only 4. Does that make any difference in the top? A little bit, yes. We have Ankur, Bala, and Karthik joining the top 5. Question number 7. When was ESR introduced in Bahrain? Is it 17, 18, 19, or 20? Good. Again, the majority got it right, but still little bit answers on the other side as well. No change. I think Joby is going really strong. He has an answer streak of 7, so he's been really listening closely. So let's go to question number 8. Who can be identified as a UBO, the ultimate beneficial owner? Is it shareholders only? Is it executive management only? Any person that exercises control over the organization? Or is it A and B combined? Okay, I was expecting this. So I think there was a clear explanation that any person who exercises control over the organization, so it doesn't need to be shareholders alone. Anybody who has a control over the management or the shareholding of other shareholders, etc. So they will also be considered as UBU. Again, Joby is still on the top. Not much change. Gaurav is in the top 5. Question number 9. When was PDPL law go live in Bahrain? Is it 18, 19, 20, or 21? When did the PDPL law go live? Right. I think this is something that was not picked up. So the PDPL law went live in, was it August, Mr. Abik, 2019?
Yeah, yes, that's right. It was
Yeah.
implemented in August.
Yes. Okay. Thank you. No change. So I think the top 5 also got it wrong. Question number 10. Which of the following measures are expected to be implemented by corporate institutions in adherence to the PDPL? So is it the appointment of a data manager? Is it to train and raise awareness among the associates? Is it to ensure security of all the data received, or is it all of the above? Which are expected to be implemented? Well done. I think most people got that right. Shouldn't change much, but yes, there's been some movement in the position. We come to the second last question. Under the PDPL, the individual has the following rights. Privacy rights, that the individual has to know about the data usage, to know about the data storage, available institutions to reach out to in case of grievance, or all of the above. Sorry for the spaces, I think got merged some of them, but again, fantastic. I think almost all of you got it right. So that's essentially from the session. So now the last question is just to ensure that people were also listening to me when I was speaking in the beginning. But before that, let's see, there's no change. So Joby has a very clear lead. So I don't think he will be losing now, because he's got a 1 question lead, more or less. So the last question is from a BCCI question. When will BCCI conduct the mentors quiz? Is it on 24th July, 30th July, 1st August, or 31st July? Great. So a number of you who haven't listened properly. So I think we will have, I was saying that we will close the current XCOM's term or the events with a mentors quiz, which will happen on the 31st of July. So that concludes the quiz. So let's see the final podium position. So the third position goes to Ankur. Second position goes to Gaurav Agarwal. And the winner is Joby, who took a clear lead at the beginning and then just kept maintaining that. Very well done. So thank you. So I hope people enjoyed the quiz. Thank you so much for joining, and thank you again for the MMJ's team. I hope this is something that we do at the end, as you know, it's become a routine for us during the last year that we run a quiz at the end. So just ensures that people are attentive. Little bit. Thank you so much, and enjoy whatever is left of the weekend, and look forward to the working week. Thank you so much, and good evening to all.
Thank you.
Uh,
Thank
Thank you very, very much. Bye-bye.
Bye-bye.